Welcome back. I'm Peter St. Onge. This is a weekly roundup of my daily videos on the economy and freedom, where I cut through the BS and lay out what the gaslighting clowns pulled out of their hats this week and what is coming next. America's trade deficit collapsed by almost half to the smallest in nearly 2 decades as Chinese imports shriveled while American exports jumped. In other words, exactly what Trump promised, with the biggest loser being China, who is now using the rest of the world as its dump for everything from shoddy electric vehicles to shoddy socks. Last week, the Department of Commerce announced the trade deficit plunged to just $29 billion in the latest month. That's down from $57 billion before Trump's tariffs. It's down from $91 billion a year ago under Biden. In fact, when Biden left office last January, the monthly deficit was $130 billion. Now it is just $29 billion. Imports plunged while exports actually increased, making for the lowest deficit since 2009. Back when the economy was deep in the financial crisis, recessions usually reduce deficits since everybody is broke. That makes the incredible shrinking trade deficit even more impressive, considering we are not in the midst of a deep financial crisis. In fact, we're growing at some of the fastest numbers since the 1980s, with productivity humming along at 4.9% and GDP growth at 5.3%, which now means we are growing faster than China. As one analyst put it, quote, "The U.S. appears to be winning the trade war with tariffs curbing imports, while trade partners are not holding any grudges and continue to buy American." So how did it happen? Comparing to Biden's last month in office, so January of 25, exports grew $400 billion annualized, while imports plunged $800 billion annualized, taking the deficit from $1.6 trillion on an annualized basis to just $350 billion. The biggest jump in exports were industrial supplies and metals and services, while the biggest drops in imports were consumer goods, pharmaceuticals, household goods, and clothing. In other words, stuff China makes. Imports of capital goods actually increased, which is a good thing. Capital goods build factories. So as next, recent videos I've talked about the crazy growth numbers we are getting right now, which are starting to translate into jobs unless you are an illegal or a Fed. Crazy growth normally translates into more imports, meaning worse trade deficits. So the deficit could start drifting up again on growth alone. Same time, in his trade deals, Trump has strong-armed trillions of incoming investment, along with trillions more of voluntary moves to reshore production inside the big, beautiful tariff umbrella. New factories take a while to set up, often years, so these will gradually come online through 26 and 27, taking the edge off growth-driven imports. So we could continue getting respectable numbers on the trade deficit, even with 5.5% growth. In short, Trump's trade war is turning out exactly as promised. Foreigners did not close their markets to American goods like legacy media predicted. In fact, they bought more. Tariff inflation was overwhelmingly absorbed by exporters. Again, legacy media was wrong. And entire industries like semiconductors and cars are already reshoring to America, just like the Japanese did in Reagan's tariffs, and something the media also smirked would never happen. 2026 is lining up one bigly boom for the American economy, and the way things are going, it won't be Chinese exporters counting the money, it will be Americans. It's the end of the road for Joe Biden's $1.6 trillion student loan bailout, the biggest since Wall Street's in 2008. Last week, Trump's Department of Education announced they'll start pursuing the roughly 10 million student loan deadbeats who are in default on the taxpayer money they took, of which 5 million have been in default for 6 years. They'll now aggressively pursue repayment, including garnishing wages up to 15% of disposable income. Now, they issued a last-minute delay on Friday to integrate payment rules from the Big Beautiful Bill, but warn as soon as that's done, they are coming. Now, you may remember these are the loans the Biden administration was trying to cancel to buy millions of votes in last year's elections. Loans that were already paused since COVID, the original logic being governments were making it illegal for people to go to work, so they shouldn't have to pay their loans. But even after the economy reopened, Biden never restarted payments because it is a fantastic way to get left-indoctrinated college kids to vote. In fact, Biden's handlers upped the ante to canceling the loans, meaning transferring $1.6 trillion of debt to blue collars and people who actually paid their student loans. Even after the Supreme Court said the bailout's illegal, Biden ignored them, tweaking the program to effectively freeze repayments forever. A loan where payments are frozen forever is effectively canceled. So the courts decided that's also illegal, at which point Biden's handlers simply withheld data from credit bureaus. So in theory, students had to repay, but in reality, nothing would happen if they didn't, the wink-nudge strategy. This also conveniently hid the deadbeats from voters while effectively giving them an amnesty on the taxpayer dime. That data finally came to light in early 2025, and it was ugly. Roughly 5.3 million borrowers had not made a dime of payments since 2020. That's way over the 270-day delinquency period, putting those loans in default for collections. Of course, instead of collecting, they covered up the numbers. So Trump is now doing a 180, demanding repayment, including garnishing wages of deadbeats. Those garnishments can reach 15% of disposable income, so roughly $10,000 a year for a typical household. And the government does not even need to go to court to make it happen. Now, this is fiscally responsible. That $1.6 trillion of student debt is one of the biggest assets of the federal government. For perspective, all the federal buildings together are worth ballpark $1 trillion. So every headquarters, office building, every post office, student loans are $600 billion, more than that. Beyond the dollars, it's morally correct. People with college degrees in the U.S. make higher wages, so bailouts are effectively welfare for the rich, paid by blue collars and responsible people who already paid their loans. Why should welders, carpenters, and car mechanics be forced to pay for other people's gender studies Ph.D.s, not to mention high school grads who struggle to make ends meet so they can pay off the loans of the children of elites? Of course, we know why they did it, because colleges are progressive indoctrination centers, swinging politics about 20 points to the left between people who go to college and people who do not. So the loans in question were overwhelmingly Democrat voters. At least Wall Street's bailouts were good old-fashioned thievery. This is politically weaponized bailouts. So instead, everybody who took out a student loan, including me, knew it had to be repaid and promised to do so under penalty of law. The federal government does not bail out credit cards, many of whom are low income. We certainly shouldn't be bailing out high-income college deadbeats so blue collars can pay their bills. This should be common sense, and Trump's finally making it happen. A word from our sponsor. If you own gold, and many of you do, you already understand how it protects your wealth from the insanity coming out of Washington. The inflation, the recessions, the wars. But with monetary metals, there's a way to actually earn a yield of up to 4% on your gold paid in more ounces of gold. You retain ownership of real, allocated physical gold with no storage costs while your ounces grow every month outside the banking system. If you're serious about protecting your future and building your legacy, head to monetarymetals.com/Peter to get started. Now back to our show. Trump is freezing visas indefinitely for migrants from 75 countries, making up 2.5 billion people, in order to crack down on visa abuse, as in we cannot trust them to tell us who's a criminal and who's likely to go on welfare. The list includes Pakistan, Syria, Yemen, Nigeria, and, of course, Somalia. India, alas, dodged this one. The freeze is officially to tighten vetting processes from these countries, with an extra motive that many of these countries have been very unhelpful about providing documentation. In fact, some refuse to take back their criminal deportees, so this adds some pressure. Now, the freeze only affects long-term visas, people who are trying to live here, so work visas, green cards, so-called family reunification, where they adopt the whole village or marry their brother. So it does not affect visitors. Syrians can still visit Disney World, students can still come, as well as short-term work like engineers setting up semiconductor factories. Still, going by recent years, it blocks roughly half of the visas from these countries, about 100,000 per year, an excellent start. The background here is its long-standing federal law to deny visas to anybody with a substantial criminal record, who might go on welfare, or is likely to overstay. Of course, these laws were not enforced under Biden. A recent study found a majority of legal immigrants have gone on welfare, which should be a ticket home. Going after these deadbeats would be the logical next step. Alas, ICE is short of manpower, given they have to send out entire squads for every deportation thanks to left-wing activists. So a pause is good, but the problem is these countries are not even trying to fix their records, because remittances from U.S.-based migrants can be a quarter or a third of their entire economy. In Somalia, it's probably most of the economy. In other words, they want to send everybody they can. Now, there's another way. I used to live in Taiwan, and they bring in Filipinos, Indonesians, and Vietnamese for factory work or elder care. But those migrants cause essentially zero problems in crime, overstays, and welfare. The reason is Taiwan negotiates visa slots every year with each country, and if any migrants cause trouble, they slash that country's slots. So the Philippines has an incentives on their end to carefully screen people so one bad apple does not cost them 10,000 slots. Now, Korea and Japan do the same, using visas with poor countries as a bargaining chip, so the source country controls quality. In fact, America used to do this. In the early 20th century, we negotiated so-called gentlemen's agreements with Japan, where they got 20,000 visas a year in return for tightly controlling quality. Japan used visas like Harvard admittance, only the very best got a slot. Japanese Americans quickly turned into model minorities. Now, this kind of deal is right up Trump's alley, and it puts the incentive where it belongs on the source country who's asking for the visas, instead of our importing garbage and making ICE and crime victims sort it out. So as billions of foreigners want to come to America. We should be cherry-picking the top 0.1%, the Elons, the Schwarzeneggers, the Alexander Graham Bells, and Nikolai Teslas. Pausing visas is a good start, but either we shift the incentive to the source countries or make the visa freeze permanent. A new study finds 21 million Americans went to college and earn less than $20 an hour. Meanwhile, college grads make up a record 25% of unemployed people. In fact, in September, the BLS pegged the unemployment rate for recent college grads at nearly 10%, which was over twice the rate of high school grads. All that for a $150,000 sheepskin, $250,000 if you went to a private university, along with 4 years of lost wages, another $100,000, but an encyclopedia worth of gender theory you can use the rest of your life. The data comes from the Economic Policy Institute, who estimates fully 1/3 of people earning less than $20 an hour have a college degree. These are jobs like retail, waitressing or barista, food service, telemarketing, data entry, and housekeeping. As the old joke goes, engineers ask, how does it work? Economists ask, how much does it cost? Liberal arts majors ask, do you want fries with that? In fact, a recent study by Cengage found just 30% of recent grads found a job in their field, while Resume Builder found almost half are working in blue-collar jobs, as in the degree was wasted. A separate study from LinkedIn found entry-level hiring crashed in traditional college fields like marketing, finance, and tech, down 17% since pre-COVID, while blue-collar hiring is up on top of illegals deporting, so Americans get twice the pay. The students and parents are starting to figure it out. College enrollment is down 2.5 million since pre-COVID, while the share of Gen Z working in the trades has grown by a fifth to 3 in 10, almost as many as work college jobs. A Gallup poll found 46% of parents would actually prefer their kids not go to college, instead getting a job, pursuing vocational training, or starting a business. Beyond the millions of college suckers, this is all a problem because overeducated failures are the foot soldiers of communist revolutions, especially if they come from privileged backgrounds like, say, trust fund New York mayors who couldn't hack it as a DJ. In a recent video, I mentioned a study of the Russian Civil War in 1917 that found low-income children of the rich were overwhelmingly Bolshevik, while successful young people were the ones trying to stop them. So as next, the college grad bloodbath is going to get worse because ground zero for AI job displacement is entry-level, white-collar cubicle jobs. Liberal arts students shoehorned into equity analysts you can now do with Grok for free. There's two solutions to our army of overeducated communist baristas. One is incentivize colleges to offer useful majors and punish them with loss of fundings for steering students into gender studies PhDs, or simpler, just end government's $300 billion subsidy to universities once and for all. The real majors, engineering, medicine, STEM, can access private loans like they used to, while useless degrees earning $20 an hour would be too risky to finance. They would have to switch to real majors or skip college and flip the burgers without the degree. A word from our sponsor. One of the best ways to secure your Bitcoin is with a hardware wallet, a physical device that lets you keep your coins offline without internet connection. One of the most trusted names in hardware wallets is CoinKite, maker of the famous block clock. CoinKite devices are made in Canada. They're run by passionate Bitcoiners who've been at this since 2012, back when Bitcoiners were trading in person at swap meets. You can pick up hardware wallets and plenty of other goodies at coinkite.com/ProfSaintAnge. That's CoinKite.com/ProfSaintAnge. Okay, back to our show. Stocks had an exciting week as we went from everything bubble to everything crash in about a day and a half, with gold and silver loving every minute. So what just happened? In case you just woke up, stocks crashed on Tuesday. Monday was a holiday, losing 870 points on the Dow. Mainstream media blamed Trump's tariff threat over Greenland, but thanks to Bitcoin, which trades 24/7, we can actually go to the tape. Turns out Greenland barely made a dent. What caused the bloodbath was Japan. Specifically, Japan's new Prime Minister Takaichi announcing a raft of reforms to slash taxes and hike government spending on the most indebted nation on earth. This sent Japanese bond yields, interest rates, soaring as bond investors worry that Japan can't handle its debts. The problem for U.S. markets is that Japan has something called the carry trade, where hundreds of trillions of yen stand borrowed by overseas hedge funds and speculators in a free lunch funded by the Bank of Japan, their Fed. So soaring Japanese bond yields crush this trade, which can set off a global rush for the exits. So Japan's original sin is when their easy money bubble burst back in 1990, instead of letting weak companies and banks die off, they put them on permanent life support with stimulus and low interest rates. This created a zombie economy of money-losing companies that hog up a third of all bank lending, and almost 10 million Japanese workers essentially paid to lose money. The result is while American productivity grew by half since 1990, Japan's actually dropped, translating into real wages that are lower in Japan than they were in 1990. And also driving Japanese government debt to 230% of GDP, which is about $70 trillion in U.S. terms. To finance all that debt, the Bank of Japan pushed interest rates near zero for around about 30 years, which you have to do because otherwise the debt interest will eat you alive. But this created the free money machine of the century, the yen carry trade, where overseas hedge funds and speculators borrow yen at zero, and then they put the money into U.S. assets, paying 5% bonds or 8% stocks. So borrow at zero, invest at 5 to 8. Thing is, this works only if Japan's rates stay low and the yen stays weak. So the low rates are the juice, but if the yen gets strong, the yen debt outgrows the dollar investment. You're underwater. So when Takaichi's presser sent Japanese bond yields soaring, that sucked the profit out of the carry trade, which kicked off an unwind, which actually makes the yen stronger since they dump assets for dollars, then they have to dump the dollars to buy the yen to repay the original loan. So you're dumping dollars, you're buying yen, the yen goes up. Suddenly the free machine goes in reverse, you get a rush for the exits and 870 on the Dow. So as next, the carry trade is the fentanyl of the financial world. The Japanese yields create an even bigger risk because they blow a hole in the Japanese banks and pensions whose vaults are full to the brim of Japanese government debt. We actually got a taste of that here in 2023 when the Fed hiked rates and a series of banks collapsed. That happens in Japan, the institutions will pile in with the carries to dump overseas assets, which are overwhelmingly American assets. So Japan is the single biggest holder of U.S. federal debt. Toss in Japanese banks and pensions, and they hold over $3 trillion of American assets, ranging from stocks to corporate bonds to U.S. treasuries. 40 years of economic mismanagement has brought Japan to the edge of Argentina. The blowback will go worldwide. Thanks for tuning in. Remember to subscribe so you don't miss an episode, and go to petersanons.com for daily videos and in-depth articles with charts and all the gory details. Okay, we'll be watching. See you next time.